Hi, and welcome back to the Freedom Law Group Law Library. In this video, we'll be taking a deep dive into the term state and how Congress, in conjunction with the federal income tax laws of 1913, created a special definition of state for the specific purpose of fooling the American people into believing they were legally obligated to pay a federal income tax when they were not. So, let's get into it. We the people created government, and we agreed to abide by the laws of the government. Government creates laws, and those laws are made up of words. As citizens who must abide by those laws, it's vital that the laws are clearly written and narrowly defined so the citizenry knows what is proper and what isn't. At Freedom Law Group, we have stressed in many educational videos how those in government have manipulated the meanings of words to gain power and control that they otherwise wouldn't have. The national government has created a second parallel nation in corporate form, with its own language, using words that have very different meanings compared to their meanings in the other nation. There's the United States of America, the 50 states of the Union, and then there's the United States, the corporation, which is located in D.C. and governs D.C. and the territories. In the corporate United States, terms like United States, U.S. citizen, U.S. person, and trade or business have been bastardized to have definitions that differ significantly from their common understanding. Additionally, terms like non-resident alien individual are created with a clear intent to obfuscate and misdirect. Now, let's look at another term that the national government has created a special definition for, which is vastly different from the standard, ordinary meaning of the word. That term is state. Let's examine what the corporate entity has to say about the term state. That definition is located in 26 U.S.C. Section 7701, A, 10, where it states, "The term state shall be construed to include the District of Columbia, where such construction is necessary to carry out provisions of this title." Let's also look at the Code of Federal Regulations in 26 CFR Section 31.3121, E-1A, where it states, when used in the regulations in this subpart, the term state includes the District of Columbia, the Commonwealth of Puerto Rico, the Virgin Islands, the territories of Alaska and Hawaii before their admission as states, and, when used with respect to services performed after 1960, Guam and American Samoa. Perhaps most clearly stated was a letter from U.S. Representative Barbara Kennelly in 1996 to an American, where she stated, the term state in 26 U.S. Code 3121, E, specifically includes only the named U.S. territories and possessions of the District of Columbia, Puerto Rico, the Virgin Islands, Guam, and American Samoa. Title 26, of course, is the Internal Revenue Code. Nowhere in these definitions does it mention the 50 states of the Union. That's because the corporate body doesn't include the 50 states. By definition, and by the exclusion of any reference to the 50 states of the Union, it means that the 50 states are foreign states to the territorial jurisdiction of the national government referred to as the corporate United States. The territorial states referred to in this regulation are clearly part of a distinct and unique jurisdiction that has no nexus with the constitutional republic, where the U.S. Constitution is the law of the land. It is well known that the states listed in this regulation are not part of the 50 states of the Union. These are territorial possessions of the U.S. Congress, and the U.S. Constitution is not law there. For more clarity, let's turn to a document that reflects wording used by the 63rd Congress in 1913. At the time, Alaska was a territory and did not gain statehood until 1959. Also, the Philippine Islands, the Marshall Islands, Palau, and Micronesia later gained independence. Here is a list of territories under the exclusive jurisdiction of the U.S. Congress: the District of Columbia, American Samoa, Guam, the Commonwealth of Puerto Rico, the Virgin Islands, Midway Island, Wake Island, the Commonwealth of the Northern Marianas, Johnston Island, Baker Island, Howland Island, Jarvis Island, Kingman Reef, Palmyra Island, and Navassa Island. Several of these are minor, outlying, and unincorporated islands that are largely uninhabited. Most people living here are deemed statutory U.S. citizens, with the apparent exception of American Samoa. According to an NBC News article from 2016, an American Samoa native who served military duty in Kuwait cannot be called a statutory U.S. citizen, as it seems no one from that territory can be. The article states that American Samoans are referred to as non-citizen nationals. He was part of a group that sued the national government to be included as statutory U.S. citizens. The group sought clarity from the Supreme Court, which declined to hear the case. The article further states, the Justice Department said U.S. territories are not in the United States within the meaning of the Constitution, so only Congress can confer citizenship, as it has for all territories except American Samoa. As Alaska and Hawaii successfully did in the 1950s, Puerto Rico is currently pushing for statehood status, which is referred to in the Constitution as admission to the Union. Obviously, Puerto Rico is already a state, but isn't a state, if you get the reference. So, the question begs a logical answer: why would the national government use such language if it didn't specifically define a unique, singular thing but instead created confusion by defining two different things with the same word? The answer lies in jurisdiction. Having a territorial United States allowed for the existence of dual definitions, and we can easily see that the national government used this duality of meanings to its advantage, coaxing sovereign Americans to unknowingly identify themselves as statutory U.S. citizens, thus gaining power over them that the government otherwise wouldn't have had. In simple terms, Congress created a special definition of the term state as part of their effort to create a special definition for the term United States, so they could deceive Americans into thinking they were legally obligated to pay a federal income tax. In the Internal Revenue Code, 26 U.S.C. 7701, the special definition of the United States includes only the states and the District of Columbia. People assume the states in this section of the tax code means the 50 states, but that assumption is incorrect. There is also a special definition of states in 26 U.S.C. 7701, and that definition includes only the District of Columbia. Which means, the legal definition of the United States for the purposes of determining federal income tax liability is the District of Columbia and the District of Columbia. As of 1913, with this special definition of the United States codified into law, Congress could rightly say that all United States residents and citizens are legally obligated to file and pay a federal income tax. That is true statement and does not violate the original Constitution, which protects Americans in the 50 states of the Union from federal income taxes. When Congress says all residents and citizens of the United States must pay federal income taxes, what they are really saying is that residents and citizens of the District of Columbia must pay a federal income tax. But when Americans hear the term U.S. citizen, they self-identify and they line up like good little boys and girls to pay taxes they were never legally required to pay. So, when you identify yourself as a U.S. citizen on any IRS form, you're stating that you are a member of the United States, as defined in the Internal Revenue Code, to be the District of Columbia and its insular territories. You've also identified yourself as someone under the jurisdiction of the corporate United States, something that does not apply to people born in the 50 states. Those born in one of the 50 states of the Union are known as non-resident alien individuals in the tax code, and their IRS tax obligation is extremely limited in scope. For 98 to 99% of Americans, again identified in the tax code as non-resident alien individuals, they have no federal income tax liability, and prior to signing their first Form 1040, would have never had to file or pay a federal income tax, as they were protected by the Constitution effective in the 50 states of the Union. Please see our video entitled, "You Are Not a U.S. Citizen. You Are a Non-Resident Alien." Also, be sure to check out our other educational videos on the terms United States and U.S. citizen. If you've mistakenly identified yourself as a statutory U.S. citizen and filed a Form 1040 individual income tax return, consider our revocation of election process, which is part of our tax freedom package. We will create a revocation of election affidavit for you to have notarized and sent to the U.S. Treasury and the IRS. The revocation of election provides documentation clarifying your true and correct status as someone who is not under the jurisdiction of the national government but rather under the protections of the Constitution and has no obligation to file and pay the federal income tax. You can learn more or enroll by visiting our website, freedomlawgroup.us, or email questions and comments to support@freedomlawgroup.us. The transcript of this video is linked below for your convenience. Please smash the like button if you found this video informative, and subscribe to our channel. Thanks for watching.